What's going on, everybody, and welcome back to yet another video. In today's video, I'm going to be sharing with you guys an easy scalping strategy that you can start using right away on futures. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. Okay, so there are two main things that we want to pay attention to for this scalping strategy, and that is going to be the opening 9:30 a.m. Eastern time candle, which is this candle right here, and then we also want to pay attention to the 10 o'clock candle. Now what we want to do is we want to mark the lowest point at 9:30 and then the highest point at 10. Now this is going to be referred to as our opening range. Now from here, what we're looking to happen is for price to either break below the low of the first 30 minutes or to break above the high of the first 30 minutes. Now, once we start breaking either above the high or below the low, we then want to look for price to come back and retest the level. So in this scenario, here is our 9:30 low and our 10 o'clock high. As we can see, we tried to break above right here, but we did not retest and make it support. However, a little later in the day, price broke above that 10 a.m. high, came back and retested it and made it support on this 5-minute candle right here. Now, once price comes back and retests that level and makes it support in this scenario, we are then going to look for a long entry with a stop loss right below this candle low. So to put it in context, this is going to be our risk and our potential reward is unlimited. So what you would do is you would look to go long, and then you can see immediately off of that push, price moved about 3 points. Now our risk on this trade was 4.5 points, so we do not want to take profit yet. We want to at least be willing to look for a 1-to-1 risk to reward. And then on this candle right here, that's when you ended up getting about 4 points. And then from there, price pushed a little higher. It's starting to pull back. This right here is when you met your 1-to-1 risk to reward. So if you wanted to, you could go ahead and take a trim. Now it's up to you if you want to put your stop loss at break even, or if you want to keep it slightly below this low right here, or just move it up a little bit, maybe like 1 or 2 points in the negative. But as we can see, price then comes back and it starts to retest that 10 a.m. low again. As we can see a little later, price comes back, retests that 10 a.m. high, makes it support again. And then a little later in the day, price grinds higher. So let's go ahead and look at another scenario. Heading on over to Thursday's price action, here's the 9:30 candle low, and then here's the 10 a.m. candle high. So once price starts to break above that 10 a.m. high, you can see price on the 5-minute time frame then made it support multiple times before pushing higher. If you did not like it here, price gave you another opportunity to get long later in the day. So as price pulls back, retest that 10 a.m. high, again, you can then look for a long entry with a stop loss right below this low. So in this scenario, to put it into perspective, you would have been getting long at the close of this 5-minute candle, which is going to be at 59.90.75, and your stop loss would have been right below this low. So you're risking again about 4.5 points. And as we can see, based off of this move right here, price ended up moving about 11 points to the upside for a 2.5R trade before pulling back and retesting that 10 a.m. high again. Let's go ahead and look at another scenario. Looking over here, we can see that the 9:30 high is right there, and the 10 a.m. low is going to be all the way down here. So again, the highest point of price action and the lowest point of price action within the first 30 minutes. Price traded in this range for a majority of the day before finally breaking above it. It unfortunately did not come back and retest it, but it did break above the level and gave a continuation higher. And then looking at one more example, again, here's our 9:30 low right here. And then here's our 10 a.m. high right here. As price broke above that 10 a.m. high, it then later pulled back, retraced to the level, and made it support 1, 2, 3 times. Again, this entire time, you could have been looking for a potential long entry and would stop out somewhere below these lows right here. So let's just go ahead. Let's say you ended up getting long at the close of this very bullish 5-minute candle right here. Your stop loss would have to be below the lower wick, which is going to be about 9.5 points. But you can see that price ended up rallying for about 15 points to the upside, or about a 1.6R trade. Now keep in mind with this strategy, it's not going to happen every day, but what we're doing is we're looking for the highest point of price action and the lowest point of price action within the first 30 minutes of market open, mark the high, mark the low, and then look for price to break above or below that range, and ideally look for price to pull back, retest the level, which is going to give you a very low risk, high reward trade. And as always, look for a bare minimum of a 1-to-1 risk to reward trade. But that is going to wrap up this video on a very easy future scalping strategy that you can start using right away. If you guys did find value in this video and you would like to see more futures videos, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And if you guys did not know, I do live day trading here on my YouTube multiple times throughout the week. So if you guys do want to tap into those sessions, again, make sure you're subscribed, bell notifications on. Other than that, everybody have an amazing rest of your day, and I'll see you guys in the next video.